You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means we are back once again to explore everything cooking on the futures options side of the fence. Yes, it is time once again for TWIFO, a.k.a. This Week in Futures Options. My name, of course, Mark Longo from the THE optionsinsider.com, as well as, of course, from the network upon which so many of you are mainlining these days. Remember, if you just listen to the TWIFO, first off, you're missing out on a heck of a lot. We have seen a lot of new entrants to the futures option space discovering this show lately and then making their way throughout the rest of the network. So if you're just listening to this show, there's a whole heck of a lot out there. A lot of you still have questions, a lot of educational content that you like. Well, then Options Bootcamp, Options Playbook Radio, two great starting points for you. Mostly focused on the equity options side, but the concepts, the analysis, the education is all the same there that you can apply, of course, to futures options. You like vol, and of course, volatility views every Friday. Crypto, we touch on that on this show as well. That's a crypto rundown every Monday, and a whole bunch more. Wherever you're getting this show, make sure you upgrade to the full network. Just search for Options Insider Radio Network if you can't find it. And then, of course, if you want to go above and beyond, a lot of great content lurking on the pro side, the THE optionsinsider.com/pro, including more than a few crossovers into the world of futures options. Dan Grams has been on our Q&A sessions in the past. Carly Garner has been on our pro Q&A sessions in the past. So a lot of guests from this show have been on there tackling your questions about all things, including futures options. So check that out, theoptionsinsider.com/pro, the place to go to learn more. As we're dispensing with the CME Group hot seat today, I get to take the catbird seat. That means it's time to dive on into a little bit of the old movers and shakers.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, listeners, welcome to the Movers and Shakers Report, the portion of the show where we break down everything lighting it up to the light side, a.k.a. the upside, and to the dark side over there at CME Group this week. And it seems like, as you might expect, we are a wee bit biased towards the light side this week. Looks like roughly 70-30, maybe 60-40 here. I'm going to say 70-30. Green over red. Obviously enough to do a bottom 10, maybe even a bottom 15. But that's pretty much about it. The rest all green on the screen. And also, scrolling through some of these names, listeners, we got some interesting names, shall we say, coming up on the old movers and shakers this week. I think it's fair to say we're going to be exploring the odd corners, the far reaches of the futures options market. Maybe blowing off some cobwebs, exploring some areas we haven't talked about in a while here on the show, which is always fun. I mean, I love our nat gases and our S&Ps and everything else we talk about a lot here on the show, but it's also fun to explore some of the dark, unknown reaches of the futures option space. Let's do that now. Speaking of dark, let's go to the dark side first, listeners. And number 5 to the dark side is our pretty much volume leader on the movers and shakers this week. It is Chicago wheat, only off 1.63%, so not a ton of dark side this week. Kind of a treading water week out there for wheat. We've been talking about wheat for a while on the show. Are they pricing in a little bit too much complacency out there? I don't know. I guess we'll find out this week if we crunch those numbers. But a decent week for wheat, all things considered, 114,000 contracts on the tape. So certainly a banger out there, certainly one we could head out to. Number 5, we start in the ags. You go to number 4, off to the metals. This is silver, another name most of you have heard of, so that's good. Off 1.87%. It was number 2 in the same direction last week, off 6.4%. So add them together, you got a rough couple of weeks here for the shiny stuff. Again, silver, you know it, it's going to hang out around 25,000 contracts. That's pretty much exactly where it is right now this week. And then number 3, we go back to the ags. It is to oats, off 2.32%. You know the deal with oats by now. We would love to parse it on the show. It certainly moves enough to get on the show week after week. It just does 3 contracts a week. Nothing to talk about, listen, unless you really want to dive deep into those 3 contracts. Not a lot for us to parse out here. Number 2, staying in the ags, but going off to the dairy. It is our old friend Class 3 Milk. Haven't checked in on this one in a while. Off 4.27% this week. Before you get super excited, 2,200 contracts on the tape right now. So I don't know if we're going to be hanging our hat in dairy, as compelling as it is. Of course, I'm lactose intolerant myself, so maybe no dairy on the show for me this week. And then the number 1 dark side mover out there, also going into the dark reaches of the ags complex, to a product we talked about a few times before on the show. It's been a little bit. And also doing some paper this week, this is our old friend Lean Hogs. They are coming for Lean Hogs this week, off 8.48%. So that makes Lean Hogs our percentage movement leader of the week out there, with 63,000 contracts on the tape as well. So nothing to sneeze at out there in Lean Hogs. So we might be sneaking a peek at the old Lean Hogs out there. Now, to the light side we go, listeners, and things get even more interesting from here. We start at number 5. We go to the old Brent, but not just Brent, the old Brent FSO, up 3.71%. It was number 3 in the same direction last week, up 4.08%. Before you get excited, you're like, hey, maybe Brent. This is the Brent FSO, listeners. This is only 1,200 contracts on the tape. If you're wondering what the hell is Brent FSO, I'm not familiar with that. Good question. These are the future-style margin options that CME added a little while ago out there. So rather than your traditional equity-style margin options, listeners, where, of course, you buy an option, you pay the premium, and you're done. You know, whatever happens, happens. You paid your money up front. If you sell the option, of course, you harvest the premium, and you kind of go from there. Future-style margin, a little bit different. And these were done to attract, a different use case out there in the Brent space, or maybe used to the future style margin a little more. So when you open a trade on a future style margin option, there's no cash flow. There's no cash flow at all. Nothing happens. Rather, they track it kind of like a futures margin. So if you're long it and it goes up, you get the premium credited to you, vice versa. And the only time any premium changes hands is when that position is closed, or whether it goes out to exercise or assignment. Then they settle it up. It's a fascinating way to approach it. But again, it's relatively novel. So for a lot of people out there, not lighting up the tape out there yet, only 1,200 contracts out there. So intriguing stuff. It's an interesting idea. It's just not lighting the world on fire. Number 4, we go back to the aforementioned sectors. We're going to talk about these a lot on the show now. No options on these either. But good movement we got here for the utilities sector. That's where we're going this week, up 3.73%. So intriguing as we start breaking down the S&P into its components, what's gaining, what's losing out there. Again, these are all futures still, so no options to be found there. Number 3, back to the shiny stuff. It is palladium, up 3.87%. Before you get all excited, you're like, some more metals. 97 contracts. So not a lot to sink our teeth into out there. Number 2, back to the discretionary sectors, in particular the consumer discretionary sector of the S&P, up 4.08%. And then our number 1 light side mover this week, listeners, it's heating oil, up 4.74%. And again, before you get all excited, all hot and bothered, 3,000 contracts on the tape. If I had seen this just out of context, apropos of nothing else, and they asked me, when do you think these numbers are going up? I would have said this is probably the dog days of summer kind of paper that we're used to seeing in mid to late August. Instead, it does seem like August was actually a rock'em sock'em robots month. So we're starting to catch up to that now in the first week of September here, where we're starting to get maybe some of the more esoteric markets that we're used to in the dog days of summer. But because we have a banger there on the dark side, I think we're going to head off to the ags first.
It's time to get our hands dirty exploring the latest options, trades, and trends in corn, wheat, soybeans, and more. It's time to talk ags.
All right, listeners, off to the ags we go. Go into that drop down over there at cmegroup.com/TWIFO, the place to go to get access to all these reports out there. And then you're lucky. Ags are at the top of the list. It is an alpha order list after all. And then into the grains and oil seeds. And then in product, we're going to go down 1 slot to SRW wheat, a.k.a. soft red wheat, a.k.a. Chicago wheat, the one that does the most paper on the wheat side anyway. 114, almost 115,000 contracts on the tape right now. So a pretty robust wheat. Easy for me to say. A pretty robust week out there for wheat. Where is wheat hanging out right now? Like we said, kind of treading water. It was off about 1.6% on the week. Since Monday, it's slightly down, about 2.2%, or about 1.25 points. So wheat kind of treading water, hanging out about 594.5 in that front future. Again, we've been talking for a little bit now on the show about what's going on with wheat. Are they pricing in a little bit too much complacency, especially given how volatile this product and this complex has proven to be in the past? And if, Putin wants to just throw a wrench into the works, it's easy for him to do. And he has been known to do it before. The grain deal's off. It's on again. We're maybe going to blockade the Black Sea. Maybe we're going to invade more territory. You never know what they're going to do out there. We had our buddy, Mr. Once in Future, Dr. Vic's talking about tactical nukes recently. Hopefully that doesn't come to pass, obviously. But there all sorts of things can be popping off in this area. And, of course, that area, a very big wheat-producing area as well. So that impact will be felt here, which is kind of why we were surprised they were pricing in a whole heck of a lot of nothing out here in wheat. And that kind of remains the case again this week. In fact, we're seeing the vol actually start to come in. We talked about 115,000 contracts on the tape, about almost exactly half, 49.6% of that going up in the D's contract. Again, I love the ags. It's not all 0 day all the time. Sorry we didn't include ags in our poll, listeners. Ags kind of play by a little bit different rules of engagement. They go out to December. So we're going to head out there as well. That future still hanging out, 594.5 all the way out in the D's time frame. What is the vol, you might be wondering, in the December wheat contract? About 27.5, off about 1.6 points. So that vol continuing to come in. So they're continuing to price through December at least. Not a heck of a lot in terms of vol. Now, sometimes the skew can tell a different story. So let's see what the skew is up to out here. And you know what the answer to that is? Yeah, it kind of is, which is kind of what I expected out here. Last week, the calls were pretty bid and the puts were offered, and that remains the case this week. So this is looking like pretty juicy collar territory. If you were intrigued to collar a little bit of wheat, wouldn't be the worst time, especially last week. Last week, the calls were 15.1% bid. So remember, that's a premium over that at-the-money vol we were just talking about of 27.5. And the puts, 8.2% cheap. So buy your puts at a discount, sell your calls at a premium. You wish you can do that in most equities you traded, right? So the ags sometimes will let you do that. We've talked about it in soybeans and others in the past. So sometimes they line up nicely for that. Not quite as attractive this week, but still pretty juicy. The puts kind of treading water, 8.4% cheap, so a little bit cheaper there. The calls coming in a little bit, 12.7% cheap. So obviously some folks maybe taking advantage of that last week to overwrite the heck out of December wheat. So if you're looking for a little bit of maybe vol premium to the upside, maybe also you can get some nice, fairly tight protection at a pretty cheap level, you could do worse than looking at Dees corn right now. Excuse me, Dees wheat right now. Where is the most active contract in the wheat complex right now? It is in December. It is the 650 calls. So a little bit of out of the money call action. Remember, hanging out at about a 594.5, listeners. It's like the big day, about 7,400 going up this week. The big day was Tuesday, 4,500, mostly opening there. 1,200, almost 1,300 on Monday, opening there. And then about 700 to 800 each yesterday and today, opening yesterday as well. So it's like a lot of opening on the 6 halves throughout the week. Are they taking advantage of what we were talking about? Are they overwriting it? There's about 8,300 contracts open on this strike. Given the fact we have skew coming in a little bit, that could indeed be the case. These traders are not idiots. They see a nice premium up there. They're probably going to take advantage of it. Also worth noting, about 7,200 of these 600s going up this week. So maybe we have some vertical action here. Looks like the big day for those was also Tuesday. 3,800 of the 600s going up on Tuesday versus 4,500 of the 6 halves. So not quite 1-to-1, but could be some opening vertical action there as well. Looks like opening on both the pars and the 6 halves on Tuesday. So it wasn't like they were rolling the 600s up to the 6 halves or anything like that. Also worth noting, almost 3,000 going up today. So the total volume on both strikes lines up pretty close, but it's very spread out on different days throughout the week. So nearly 3,000 today, 3,800 on Tuesday. The rest, such as it was, kind of scattered throughout the week. So interesting paper, pars and 6 halves lighting it up out here in Chicago wheat. Then we do have some puts. The 560 puts going up 4,244 times this week. 2,400 of that today, 1,300 on Tuesday, mostly opening there, and scattered 100 lots going up the rest of the week again. So intriguing stuff worth noting. There are about 4,200 contracts open on that strike, so today's paper could potentially be closing. But intriguing stuff there, 560 puts. Maybe they are legging into that collar, listeners. 560 on the downside. Par would be a little tight, not giving yourself much upside. Probably the 6 halves, probably a little bit more attractive at that level. But intriguing stuff out there. I always like it when these nice tight collars line up. It makes it attractive for people who don't normally trade the ags, wouldn't maybe be interested in that, or holding a future against an options position. This is a decent way to go about it without a heck of a lot of risk on the table out here. In fact, you can maybe do these collars for a credit if you line them up correctly. So can't say that too often in a lot of the products we talk about. So intriguing stuff out there. So if you're maybe intrigued, looking to dip your toes in wheat with perhaps not a ton of risk on the table, maybe now is an intriguing time to do just that. Let's scroll around a little bit, see if we see any other interesting and or aberrant prints. Let's go back to the 8-day contract expiring in October. The pars going up there, the 600s, 3,600 times. Trading pretty actively all week long, 1,300 today, 1,100 on Tuesday, and pretty much 600 each Monday and Wednesday, opening all week long. So opening on the pars, again, that's about the at-the-money strike, so it makes a lot of sense out there. Only 1,400 open on the strike, so today's paper, pick your poison, what they were up to out there today. We also saw, if you want a little bit more upside, listeners, how about we go out to March, the March 900s. Going up 2,533 times this week. Almost all of that today, 2,122 today. So a lot of them going up today. There's 10,500 contracts open on this strike, so they could be taking some of these 900s off, but it's a little early taking off the March 900s, but maybe wheat has just retreated to the point where those are just no longer tenable. They want to get what the heck they have left out of them and get the heck out of Dodge. They could have put those on back when we were threatening 1,000 not too long ago, listeners. So those could be a bit painful out there, but intriguing stuff here. So there you go. There's our volume leader for the show this week, which is our old friend Chicago wheat. But since we're hanging out in the ags, listeners, let's pop back into that product family. We're going to go from the grains and oilseeds at the top of the product family. We're going to go down 4 slots to livestock. Then we're going to go down 2 slots to lean hogs. Our old friend lean hogs, our percentage movement leader of the week, off about 8.5%, and also putting up some numbers, 63,000 contracts on the tape. That is nothing to sneeze at in the realm of the hogs, listeners, because this product not too long ago kind of traded by appointment. So getting any kind of paper like this is worthy of note. You might be saying to yourself, where are lean hogs futures trading right now? And that front future, about 83.30, a little bit north of that right now. So up about, looks like about 1.8 handles, or about 2.2% on the week. That is that front odd future that's going away in about 29 days. That's also where the lion's share of the paper went up this week, 30.4%. So we're going to hang out there. Obviously, no weeklies, no zero DTE in the lean hogs. That would be an interesting one to add to our poll, but we did not, unfortunately. So we're going to hang out in the October contract. It must be infuriating and or refreshing for a lot of you to be talking about products that are not expiring tomorrow. What is the vol, you might be wondering, out here in lean hogs these days? It's about a 22, coming in a little bit, off about 3 points this week. So they're coming for lean hogs vol this week. As for skew, not a ton to be found here in the October contract. The puts last week, 1.6% bid. This week, getting a little bit more juicy, 5% bid. So a little bit of a premium there. The calls, 0.6% cheap, so kind of flat. This week, 3.8% cheap. So coming in a little bit on the calls, puts getting a little bit more bid. So maybe leaning a little bit to the dark side here in that front contract. You go out to December, just 1 month past it, though, and the puts were pretty bid last week, 11.3% bid. They have come in now to 6.1% bid. The calls, 2.2% cheap last week. The calls, very offered, now 9% cheap. So interesting skew afoot out here in the lean hogs. You go out to February of next year, you've got about a 7% bid to the puts and about a 9% discount to the calls. So kind of a modest equity skew percolating here in all things lean hogs. Let's go out, see what the big dog out here, such as it was. I did not expect this. Let's go out to April. The April future hanging out at about an 84.40, listeners. It was the 40 puts, 40 puts, that were leading the dance out here this week with exactly 4,000 contracts. 2,500 on Tuesday, all opening. 500 on Wednesday, also opening. And 1,000 today. So I'm going to guess probably opening today as well. So someone opening for size, certainly relative to lean hogs, that's a pretty big trade, all week long, except for Monday, on the 40 puts. Like we said, the at-the-money strike here is 84.40. So you need a 44 handle sell-off of these puts to start getting juicy, start getting relevant out there. And obviously, it can go less than that, and these puts can catch a bid. But it's an intriguing choice, nonetheless, here, listeners. Are they harvesting? Are they overriding the heck out of those? Now, let's look really quickly. Let's go into, if you have the full fun, listeners, of the full suite of Bantix tools at your disposal, you can run the block trade analysis, and we can go out here and see exactly what's going up out here in the lean hogs. I see a bunch of blocks today going up on the future side. That's interesting. Let's limit it to just options here so we can see what's going on the options front, and not a heck of a lot today. Let's go back yesterday, see if any big blocks were dominating the tape. Nope. Right, here we go. We have a couple of blocks of 100 lots of the 180. Right, these are live cattle they're giving me. They only filter for livestock. They don't filter by the individual products within it. So they're giving me live cattle. So I don't see any blocks of puts going up for this funky 4,000 lot 40 puts. Someone had to negotiate these. It'd be interesting. Would you think they're overriding those, listeners? Again, there's not much premium. Well, let's see. Actually, you know what? Actually, that skew all the way out in April, those puts are 8% bid. So could be kind of enticing to overwrite those. And if you get lean hogs at a 40 handle, judging by where we're trading today, not a bad discount. So I have seen worse overwrites. If they're buying those, that's intriguing in and of itself as well. A bit of an apocalyptic hedge there. But again, lean hogs putting up some numbers out there this week. So an intriguing start to the show, listeners. Got some Chicago wheat and then some lean hogs. Where we go from there is pretty much anyone's choice out there, listeners. All the light side is mostly products that are not putting up a ton of paper, I think, to put it mildly. Let's go out then to the metals because we've got our old friend silver lighting it up. So let's head out to the shiny stuff next.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
All right, everyone, welcome to the wonderful, the exciting world of metals. Go into that drop down, and then you're going to go out of ags, and you're going to go all the way down, not quite to the bottom of the list, one above it, to metals. Then we're going to go product family to precious, and then we're going to go two down to our old friend silver. Like we said, about 25,000 contracts on the tape right now. So a little bit of action out there in silver. This one's been lighting us up for a while. So I had a lot of movement this year so far, a lot of action out there. So I know a lot of you like to sling it through the SLV, ETF, whatever your poison is. I know a lot of you have been watching good old silver. Silver on the year, after looking pretty juicy and robust, and they rallied it earlier in the year to about a 24, at least out there in the SLV, off about 6% on the year now, off about 1.35 handles out there. Again, on most of your preferred vector, which is SLV. Coming into the futures here, we're at about a 22.90 right now in that front contract, off about a quarter of a point, or about 1.1% out there. So giving up a little bit again out there. Let's see, what was the low out there? Looks like the low came in the March timeframe, which is understandable. All that contagion craziness. They crushed SLV down to 16 2/3. So we are still above that right now, listeners. In terms of action, again, the metals kind of move to the beat of their own drum. They're not all 0 DTE all the time, even though there are weeklies out here. But the action right now, 29.3% of that, about 25,000 contracts, going up in the D's contract. So we're going to hang out there in that expiration cycle. That future at about a 22,905 as well. In terms of the vol right now in silver, and again, the metals, not typically bastions of volatility, but they're looking pretty frothy right now, especially when compared to things like VIX, which is pretty anemic. You're at almost a 23, a 22.90. It's off about a quarter of a point, so kind of treading water from a vol perspective as well. But again, you're talking about a 10-point premium to S&P vol right now. So I know for a lot of you, that is the bellwether, the gauge that you measure market sentiment against. So if you're looking for a little bit more juice, maybe silver is the place you want to hang out. If you're looking for skew, not a heck of a lot going on out here in the D's contract. Metals traditionally bid to the upside, and that is the case again this week. The calls last week, 5.1% bid. This week, 5.5% out in December. The puts last week, 2.4% cheap. This week, 2.1%. So you get a little bit of a discount to the puts, get a little bit of a premium to the calls. So it's not quite what we were seeing in the Chicago wheat in terms of favorable for collars, but it's still a premium to the calls, a discount to the puts, however big it might be, is certainly something you're looking for out there from a collar perspective. So again, it's not quite as enticing as what we were just talking about, but it does line up that way. If you want to go a little bit farther out, if you go out to, let's say, looks like the May timeframe next year, May into July. July, the calls are nearly 11% bid next year. Actually, if you go out to September of next year, the calls are 12% bid. So if you wanted to really tie up a long-term collar, I'm not sure if that's the way I would love to do a collar, but if you really wanted to do that, the puts are about 2%. Actually, the puts are bid too. That's kind of interesting. So if you go that far out, you get a little bit of a bid to the wings in both directions. 2% bid to the puts in September of next year. The calls, 12.1% bid. So interesting. You could probably play with that a little bit out there. But that's a long way to go to write a call, but intriguing stuff out there. Let's go back to the D's expiration cycle before we get carried away talking about skew here, listeners. What is the most active contract out here in silver this week, listeners? It was the D's 25 calls. Again, we're at about a 22.90 on that future in December, so a wee bit out of the money calls. They went up 1,600 times this week, 1,343 of that today. So a lot of action out there in the D's 25s today. Also worth noting, 1,500 of the D's 24s going up today. It looks like this might be a roll because there's 1,500 of the 25s open and only 279 of the 24s open. So clearly they're opening on the 24s. Could be a bit of a roll down, getting the heck out of Dodge, saying, you know what, the 25 handle by December, probably not going to do it. So let's take advantage of a little bit of a sell-off, a little bit of a retreat out here in silver to move us to a little bit more favorable strike. That seems like what they're up to out here. Beyond that, you have to kind of dig. The 30 is going up this week as well, 750 times. There's about 3,500, actually 3,900 of these open, so anyone's guess what they were up to out here. It looks like they did 500 of them on Wednesday, mostly opening there, about 250 on Tuesday, and kind of scattered paper the rest of the week. So back and forth on the 30s. They don't line up. I thought maybe someone could be rolling even some 30s down today as well, but none of that. It's all earlier in the week. So yeah, if you had the D's 30s, if you were feeling a little bit of that FOMO maybe in silver, you were loading up on those. Maybe you're giving up the ghost on those this week as well, whatever premium is left in those. Remember, it wasn't that long ago. It was back in the meme stock days, listeners. There was all that scuttlebutt, all those rumors about it's going to be a squeeze in silver. It's going to be like some of these little meme names that they could just squeeze up to high heaven. And we had to kind of disabuse people of that notion on this show. The futures options market, a little bit of a different beast from a liquidity and trading perspective than some of these little tiny meme stocks that you're driving all the way to the moon. So that squeeze obviously never materialized, but made people intrigued by silver. And I think that's carried over to this day a few years later in some of this vol. The vol has remained pretty steady in terms of volume, around 25,000 contracts out there. So some folks clearly discovered the shiny stuff in that period, and they're still digging around out there and slinging some paper as a result. I'm just looking here, listeners. We were talking here about our old friend Brent, the Brent FSO, coming in at number 5 this week. Not a heck of a lot of paper to parse out there, but if we go outside of that one spot to number 6, we have our old friend NatGas up 2.91% this week. So I think it's worth a little bit of a foray into energy.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, listeners, as fun as it is to talk lean hogs and consumer discretionary sectors here, it's also fun to get a few bangers here on the show, and nat gas certainly qualifies there. Quite the volume banger this week as well. Just falling right outside our top 5 at number 6 this week, listeners. But if we did a volume mover and shaker, nat gas probably would be on the list. Just a tick under 600,000 contracts on the tape right now, listeners. And we're already only at Thursday. So a banger week out here. Usually we expect 400, maybe 450 if it's really active. So a pretty active week for nat gas. Where is all that paper going up? 51% going up in the OCC contract that looks like about 12 days to go. So effectively a weekly going up out there. That front future at about a 270 right now, up about a dime this week, or about almost 4% on the week out there. So 51% going up in the OCC future. We're going to hang out there. What is your vol and nat gas? You've been saying for a while, it got a little bit frothier over the last couple of weeks, but we were saying even at those levels in the mid to low 60s, it's still kind of light for nat gas vol perspective. They're giving some of that back again this week, 57.85 in that OCC contract, off about 5, not quite 6, about 5 3/4 points on the week. So all that juice they gained over the last couple of weeks, nat gas vol giving it back this week. Still the most volatile thing we're going to talk about on the show this week, but not quite the triple digits monster it was not too long ago. Skew-wise, we've been kind of analyzing and parsing the skew out here for a while. We were talking with our old buddy, the once in future and now present Dr. Bix, on the show last week about how we were all kind of surprised that it wasn't pricing a heck of a lot of action in the near term for nat gas skew. It seemed like we were kind of settling out around that roughly 270, 275 level. And the skew kind of still doing that this week. Last week, the puts were 1.6% bid. The calls, 1% bid. So kind of a slight bid in both directions, which kind of translates to a whole heck of a lot of nothing. This week, the puts, 2.5% bid. The calls, 2% offered. So slight bias to the downside, but ever so slight. You got to really scroll out a little bit to find a more dynamic skew. Let's go out to, again, seasonality, a big factor in nat gas, and that's certainly in play in Q1 of next year. Let's go out to, let's say, February of next year. So you're still in the throes of winter, nat gas, a big concern. Then the calls, 8.8% bid right now. The put's 7.3% cheap. So now you're starting to get into some of that collar territory we were talking about before. Still not quite as good as what we were talking about in the Chicago wheat, but not bad, all things considered. If you were looking, by the way, the future out there in the February expiration cycle hanging out right about a 360. So about 90 cents north of where we are in that front OCC contract we were just talking about. So intriguing stuff out there. Obviously, the more you move around the term structure, you're going to find some different outlooks on the skew. But it looks like the most premium, the most bid to the upside we're finding is in that Q1 of next year, unless you want to go all the way out to 2025, which now you're talking nonsense at that point. In terms of action, we're getting back to some more relevant strikes, dare I say it out here, listeners. It was the OCC 3 calls leading the dance this week with almost 31,000 contracts, so a pretty action-packed week. Also worth noting, they were kind of back and forth all week long. The big day was actually Tuesday, 8,300 on Tuesday, mostly closing there. Then 8,100 on Wednesday the next day, and they're opening there. And then 8,300 actually today, so I take it back. Today kind of tied with Tuesday. And then Monday, 6,200, mostly closing. So back and forth, closing earlier in the week, and then looks like opening later in the week. Worth noting is about 34,000 contracts still open on this strike. So today's paper is up for grabs in terms of what they're up to. Are they bailing? Are they adding more on? I guess if the OI trend is our friend, then maybe they're adding more today. But intriguing stuff. Also worth noting, the puts pretty active as well. The 2.5 puts going about 30,000 times as well. So maybe a 2.5 3 strangle. You like that, listeners? They didn't go up uniformly enough to be that. But if just looking at the strikes, which way would you go on that? Would you buy that strangle 2.5 3? Would you do it as maybe a bullish risk reversal? Sell the 2.5 puts, buy the 3 calls, use them to finance a little bit of an upside play out there. And if it turns around, you get the stock or the underlying at a little bit more attractive level. You like it the collar the other way, sell the calls, buy the puts. I'm not sure, that doesn't excite me, but again, if we're looking at the skew, not much call bid in the October cycle, so it's not as attractive as if you were doing it in the February or March cycle, that's for sure. But intriguing stuff nonetheless. The 2.5 puts, the big day for those was Tuesday as well. 12, almost 13,000 contracts going up. Most of that closing. And then today, 7,400, 6,400 on Wednesday, and 4,100 on Monday. The only day that was opening was Monday. Worth noting is about 28,500 contracts open on the strike right now. So again, today's paper is anyone's ball game. If you want to go a little bit farther out, the 2 puts going up about 25,000 times this week. The big day for those, Wednesday, almost 8,000, slightly opening there. 7,100 on Monday, slightly closing there. 6,400 on Tuesday, ever so slightly opening, and 3,200 today. And even more open on the 2 strike, 58,000 contracts open there. So a lot of paper has been lining up on these strikes for a while. No surprise. You've been listening to this show for a while. You've heard us talk about the 2 put strips and everything else we've been talking about here on the show for a while. Speaking of the strips, actually, looks like this week's strip, the one that flummoxed the once and future Dr. Vix. Looks like we have a couple of them going up this week. We have a bit of a 7 call strip going up about 16 or 1,700 times. Actually doing different size this time, which is weird. And they're going up from January until March on the 7 calls, about 1,600 times. And after that, they switched to the 2-quarter puts in April, and they do those all the way to September. Shit, do they go to December? No, they go to October. And they do those 1,000 times each 2-quarter puts. So I guess they're back on the put side as well. As we've been talking for a while, they were doing 5 and 6 call strips. Looks like we have a little bit of 7 calls going up, but not many. And the rest of the year, it's all 2-quarter puts. So yeah, these strips are funky, and certainly I know the once and future Dr. Vix was banging away at his Bloomberg last week to try to figure out what the heck they were actually up to. They are a bit of a head-scratching puzzle. Not quite as crazy as the $1 wide size verticals we used to see going up in WTI, but still a weird one out there as well. You know, this week seems like a weird one for the futures options listeners. So let's close it out here with a little bit of your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's Mixlr.com.
All right, everyone, welcome to your futures options feedback. And you know what? Last week on the show, an interesting discussion with our buddy, Mr. Dr. Vix, about the potential for adding more zero-day contracts into the mix. Because whenever we talk equities, obviously, everyone's obsessed with all things expiring tomorrow. But you get out some other complexes, you know, some seem like they might also be suited to adding that kind of liquidity out there. Others, not so much. We just talked about ags not too long ago. Those probably don't fall in that mix. But we thought, you know what? Who better to determine this than you folks, our audience, the ultimate arbiters of all things here on the network, listeners. So we put it out to you this week. Our question of the week, which you can play along with at Options on Twitter, listeners, is quite simply zero DTE, very popular out there with a lot of the index options traders. But what's next? Which product or market or complex should list zero-day options next? Gave you 4 choices to mull over. First, your single name equities, so your stocks, your Apples, your Teslas, a lot of the things you folks trade every day out there. You know, we talk zero-day in the equities, but it's only in the indices. It's not in the single names for a variety of reasons, usually having to do with after-hours contra exercise orders. A zero-day contract really gums up the works on those, so some people have debated about whether we should add cash-settled options as a way to create these. So you have to list an entirely new product category first before we can go back and create zero-day Apple and Tesla and whatever names you want to add. But if it makes dollars, it makes sense. And the exchanges certainly see a lot of demand for these. So will they do with it? I don't know. I wouldn't put it past them to try anything at this point. We also gave you volatility. So your VIXs, your VXXs, pick your poison out there. Also gave you, relevant to our show today, commodities. So it could be your ags, which again would be a weird choice, or energy or metals. You know, pick your complex out there that you'd like to see some zero-day action in. Looking at it right now, you know, your energy is probably the leading choice out here. Unfortunately, we don't really have a lot of that near-dated paper yet in the nat gas. We pretty much only have the weeklies out there. But you get out to a product that has a little bit more near-dated flow. You get out to something like a good old crude oil or a WTI, something that maybe might fit this trading style a little bit better. Now you've got contracts expiring today, contracts expiring tomorrow, contracts expiring in 4 days, in 6 days, in 8 days. So this is starting to look a lot like a traditional equity offering. In fact, right now this week, we didn't talk about crude oil, listeners, but crude oil also having a banger volume week. 563,000 contracts on the tape. That front future WTI 90 and a quarter right now. So Carly was talking about triple digits. Unfortunately for all of our wallets, not that far away, up 2 3/4 points, a little over 3, about 3.1%. So a lot of upside to be found here in the energy complex this week. Let's do a quick breakdown of WTI while we're at it. Why not? It's one of our friends. And again, to prove my point about how it might be suitable for all things zero DTE, 43% of that paper, so 43% of the 563,000 contracts is expiring tomorrow. It's in the contract that expires tomorrow. So we effectively already have some of this right now in WTI. So if someone were to come to me and say, hey, we're going to start adding zero-day contracts so they are listed and settled all on the same day, and we're going to do it in WTI, I would say that is an intriguing prospect, sir and or madam. Actually, right now, run future 90 and a quarter, the vol 29 and a quarter, up about 3 points, 2.9 points, so getting a little bit of a pop. Again, this isn't that contract expiring tomorrow, so take all these vol and skew numbers with a huge grain of salt. The puts, let's see, 1.2% cheap. The calls, 3.6% bid, so a little bit of a premium to the calls out there. And the most active contract in WTI this week, the 90 calls expiring tomorrow. So at the money calls. Again, going right back to what I was just talking about. This is effectively a zero DTE trade right now. They've been trading all week long. The big day is actually today, 8,400. So that's a 24-hour trade right there. And then you have 7,200 on Tuesday, 6,300 on Wednesday, 3,200 on Monday. Looks like the people have been bailing all week long on these 90s, so maybe once we kiss a little bit through it or past it, people get the heck out of Dodge, and they kept doing it all week long. Worth noting, if that's the case, they still have some to go because there's 12,650 open still on this strike. So a lot of action on these 90s, and again, very much in the 0-day time frame. What about you folks? Would you trade a 0-day WTI contract? I have a feeling you might, because looking at these numbers here, the numbers don't lie. Again, over 500,000 contracts, 43% of it expiring tomorrow. I got a feeling you folks might sling some of those. You're speaking with your volume at the end of the day. And then we also gave you crypto. So your choices are single name equities, commodity options, could be any of the above, could be energy, could be ags, could be metals, whatever you like. Could be crypto, so your Bitcoins or your ETHs, or volatility, your VIXs, your VXXs, all that fun. And winning right now, listeners, with 43.2% of the vote are the single name equities. So your Apples and Teslas. Folks want those first. Can't say I blame them. Does seem like there are more hurdles in that way than there are on, let's say, the WTI side. So maybe we'll see the WTI ones first. CME seems willing to play a little more in some of these 0-day things and start adding that near-dated liquidity. They were just trumpeting how much weekly options paper they're doing in WTI right now. So they're seeing this. So that would be the logical next step. Will we get it this year? Will we get any of these this year? It might be a little bit of a bridge too far, but intriguing stuff. 43.2% of you choosing single names. Right behind it, 29.7% choosing volatility. So your VIXs, your VXXs. Now, SIBO did list a single-day VIX index not too long ago. It's kind of wonky, I think, to put it mildly. If you want to go deep on it, we had a good discussion with that with our buddy Scott Nations on our pro Q&A session not too long ago. And to put it mildly, he is not a fan of the single-day VIX. Kind of breaks down midway through the session, listen. It starts pricing in the next day's options, and things get kind of wonky from there. So would that be tradable anytime soon? We just talked about this on our Option Block show. Our buddy, the greasiest of meatballs from Option Pit, he thinks they'll never list a single name VIX. I wouldn't say never, because when it makes dollars, it makes sense. SIBO will probably try to find a way to do it, but it would be quite the challenge out there. So that's number 2 right now, 29.7%. Then our energy and our gold and all the other kind of futures options coming in at number 3, a distant third, 18.9%. That kind of surprises me. They make the most sense out of all of these. And then bringing up the rear, we have crypto, 8.1%. If you don't agree with that, listeners, make your voice heard at Options, because that poll is still live. All right, listeners, that's going to do it for that Just the Facts, ma'am, edition of TWIFO. There you go. I even snuck in another banger for you there at the end. A little bit of WTI for those of you who wanted a little bit more energy in their lives. But it is going to do it for us on the show. Also going to do it for us on the network today. Back again tomorrow, noon Central, 1 p.m. Eastern. If you can't get enough of the once future and now present Dr. Vix, he will be joining us on Volatility Views tomorrow to break down all the action he saw at this week's big Global Volatility Summit. So he's our man on the scene, boots on the ground for us out there. So he'll be covering that for us tomorrow. If you want to hear all the findings from that, the latest thoughts, research, what's the big money thinking on the vol front, tune into Volatility Views tomorrow. After that, exclusively for you pro folks, we're back again with Options Oddities, breaking down the crazy week from an unusual activity perspective out there. Then back again next week with our usual array of content, including the Option Block on Monday. And for those of you who like crypto, the Crypto Rundown on Monday as well. All the way through to next Thursday, another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.